Hello friends, welcome to Market Buzz for the month of December 2022. As always, if we look at from a market standpoint, the Indian markets have been resolute, and in the last 1 year or so, we've outperformed the Asian markets as well as the global developed markets meaningfully. The worry which the Indian markets had for the last 3-4 months was not related to India, but it was more so what was happening outside of India. And if we look at from that standpoint, the last 15 to 20 days have some good news. Good news in terms of, if we look at from China standpoint, the opening up of China after the strong COVID lockdowns is leading to a bounce back in the Chinese equity markets, and it being the second largest economy in the world, that will help uptick, or it will help the resuscitation of the global equities as well. Meaningfully, if we look at in US as well, as we had discussed last time, the US markets in October had gone up, and with the inflation numbers globally now looking lower than what were previously expected, the worries which we had of stronger central government tightening or central bank tightening of interest rates is no longer there. That standpoint, India continues to print good numbers. The month of November saw auto sales which were good. The month of November saw GST collections which were good. So those strong collections which have happened over the last 6-7 months is indicative that the core strength of our economy is strong. With this backdrop, however, if we look at from an Indian standpoint, of our savings, less than 6% of the money is in equities. And so as Indians, we need to start investing a lot more in equities than we have traditionally been doing. Which is the better way to do it? We do believe that funds like ICICI Prudential Balance Advantage Fund and the multi-asset fund category that we have is something which you can look at from an additional investment standpoint. These are relatively conservative ways of investing in markets, because these funds, especially the ICICI Prudential Balance Advantage Fund, tend to keep lower equity when valuations are high and increase their equity allocations as the market starts coming down. Along with that, we do believe that the value category and the special situations category also will fit in your long-term equity investments. Keep in mind that in the next 5, 7, 8 years, as India moves from $3 trillion to $5 trillion, there is a chance that wealth will be created across many sectors. And a better way to participate in that is through investing in the balance advantage fund category, value category, special situations category, large cap category also can be looked at. Now, with the increase in interest rates over the last 6-8 months, debt mutual funds as a category is also becoming interesting. We do believe that you can add the ICICI Prudential All Seasons Bond Fund, ICICI Prudential Credit Risk Fund in your overall portfolio mix to bring that solidity which debt brings in, and with the higher interest rates, your yields will improve at an overall portfolio level. Now, along with that, as I was mentioning, global worries were there, and global markets, equity markets had underperformed India significantly. With that backdrop, over the last couple of months, we are basically telling our investors to look at the ICICI Prudential Global Advantage Fund of Fund. It helps investors to invest via this fund of fund into Indian domestic mutual funds which are investing outside of India. This fund currently is tilted towards the Asian markets or the emerging markets because they have underperformed significantly. And we do believe that India being only 3 to 4% of the global GDP and the global market cap, the balance 96-97% also, which has underperformed over the last 1 year, should find a place in your overall portfolio mix. You can do that with starting your allocation towards the ICICI Prudential Global Advantage Fund of Fund. Along with that, if we look at it, there is a diversification required through gold and silver as well. We are seeing gold and silver emerging as an asset class from a financial standpoint as well, and to that extent you can look at 5 to 10% of your portfolio being invested in the ICICI Prudential Gold ETF or the ICICI Prudential Silver ETF and their fund of funds, because it allows you to diversify your portfolio from equities and debt. And as we know, gold and silver over longer periods of time can create value, and over the last 8-10 years, if you look at it, they have undergone a consolidation phase. So with this overall portfolio mix improving, we do believe that your wealth creation journey along with India's growth will be good, and the key to always investments is patience. So with patience, we do believe that the growth of India will get reflected in your wealth creation as well. We are looking towards a year end of holidays, and we wish you and your family great time together. and look forward to seeing all of you in 2023 with another discussion in Market Buzz. Thank you so much.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.